It's not really how much gold to silver you have, or how much ammo you have, or how much you're prepared for the next crash. It's how much your community is, and if this election is going to be successful, then bringing the American people back together will give it the best chance of surviving the end.
What if I told you that silver, not gold, not Bitcoin, might just be the financial lifeboat you need as the global economy heads toward an unprecedented collapse? Rafi Farber, one of the sharpest minds in the market, believes the price of silver is primed for an explosion, and he's not alone. In this video, we'll uncover the forces brewing beneath the surface that could make silver the most valuable asset in your portfolio. Trust me, you won't want to miss this. Let's dive in.
As far as the Fed data goes, I'm sure if we have some wonky people watching this, they can go research rates. When was the time before 1969 that the Fed cut rates and long-term bond yields were up? I'm sure it happened maybe around World War II or something, maybe once in the 50s, once in the 60s, but check it out. Comment it below if you find any more evidence. But I think I have enough evidence to say that if the Fed is cutting and long-term bond yields are rising anyway, then we're in a bond bear market. Because if you took those three data points, 1969, 1974, 1981, those were all bond bear market. 1981 was the tail end of the blow-off, bottom or top of the bond bear market, depending if you want to look at bond yields or bond prices. And then since then, it hasn't happened. So this is another confirmation that we're in a bond bear market, which means interest rates are going to go higher and higher and higher. And the only way the Fed can stop it is basically by buying the entire bond market, which is basically what the Bank of Japan has done. But the Fed can't do that because that would destroy the dollar, because the Bank of Japan is not in charge of the world's reserve currency, whereas the Federal Reserve is. So they can't really buy the entire bond market. That would make the dollar worthless. And by extension, every other fiat currency. So that's basically where we're headed. There's no escaping from it. The other thing that I noted was that the left-wing media is already picking up on this. They're picking up on the fact that they have no power, that nobody pays attention to them. Thank God, for good reason. Nobody should. So they're saying, well, what can stop Trump and his fascist agenda, or whatever they want to call it? Well, they say it's going to be bond yields. And in a way, they're right. I mean, he can't really control bond yields, and it's going to end the monetary system, and Trump is going to be blamed for it. I mean, I think we all knew that's coming. It's not like they're going to turn around and, have their find God moment or anything like that. They're going to stay who they are, and they're going to become less relevant, but they're going to be right about that. He's not going to stop the crash of the dollar. Just they're right for the wrong reasons.
To understand why silver is poised to become the ultimate safe haven, we first need to look at the storm clouds gathering over the global economy. Right now, we're seeing a perfect storm of rising bond yields, runaway inflation, and geopolitical uncertainty that's threatening to destabilize markets across the globe. This is not just a financial hiccup, it's the kind of destruction that reshapes the world economy. Let's start with the bond market. Historically, when central banks lower interest rates, long-term bond yields tend to decline. But today, we're witnessing the opposite. Bond yields are climbing even as rate cuts loom on the horizon. According to Rafi Farber, this divergence hasn't been seen since the 1980s, a time of major economic upheaval. What does this mean for you? Rising bond yields indicate that investors no longer trust the stability of government debt, and when trust erodes, people flee to safe havens like silver. And then there's inflation, the invisible thief stealing purchasing power from everyday people. Central banks are caught in a vicious cycle. They either keep raising rates to fight inflation, which risks triggering a recession, or they pivot to printing money, which devalues currencies even further. In both scenarios, the value of paper money declines, but precious metals like silver retain their worth, making them a haven for wealth preservation. Now add geopolitical instability to the mix. From escalating tensions in the Middle East to a global supply chain, still reeling from the pandemic, uncertainty is driving investors toward assets that can weather crises. Historically, gold has been the go-to safe haven, but silver, with its unique blend of industrial and monetary uses, is increasingly stealing the spotlight. It's affordable, accessible, and as Farber puts it, the poor man's gold, allowing everyday investors to protect their wealth without breaking the bank. But let me ask you this. What happens when the demand for a safe haven like silver collides with its growing industrial use? Could this dual demand propel silver prices to heights we've never seen before? Stay tuned as we uncover the critical forces behind silver's rise and why this opportunity might not last forever. If you're finding this eye-opening, don't forget to hit subscribe for more insights like this. And here's a question for you. What's your go-to strategy for safeguarding your wealth during turbulent times? Let's start a conversation in the comments below.
It's 1981, and so it's new for all of us as traders, and unless you're 70s, 80s, maybe late 60s. So what I found is that rising long-term bond yields like 10, 20, 30-year treasuries hasn't happened together with a rate cutting cycle since 1981. I looked in the data. I configured a Fred chart from the St. Louis Fed, looking at the Fed funds rate, and every time it went down, every time the Fed started cutting, what happened to long-term rates? And since 1981, they've always gone down. There was one little possible exception in 2008, but it wasn't really an exception because, excuse me, there was a short period in 2008 from about March to June when the Fed wasn't cutting, and during that time, the 10-year yield went up. I also looked into why that was, and during that time, actually, most people are not aware of this because we equate 2008 with the start of QE and bond buying and money printing, but it wasn't exactly that way. The Fed was expanding its balance sheet beginning in mid-2008, but it did that simultaneously with selling U.S. Treasuries because it was trying to balance things out. There was still some semblance of let's not be too dovish or liberal with money printing here. So they were selling Treasuries during that time. So that's a reason why bond yields were heading up while the Fed was holding rates steady. But if we if we exclude that, it doesn't have to be excluded in my opinion. It follows the pattern. But the point I'm making is that we haven't had sustained rise in long-term treasuries with a Fed rate cut since 1981. And before that, there was one time in 1974. It was like 3 or 4 months in 1974. Before that, 1969, 1970. And
Silver's potential doesn't stop at its role as a safe haven. It also holds a competitive edge over other assets like gold and Bitcoin. To truly grasp why Rafi Farber champions silver as the ultimate investment, we need to compare it to these alternatives. First, let's talk about gold. For centuries, gold has been the standard for wealth preservation. It's scarce, it's tangible, and it's universally recognized. But here's the catch. Gold is significantly more expensive. This high cost makes it less accessible to the average investor, leaving silver as the affordable alternative. Farber aptly calls silver the poor man's gold, and this isn't just rhetoric. Silver offers the same wealth-preserving qualities as gold but at a fraction of the price, making it a smarter choice for those looking to safeguard their assets without overextending financially. Now, how about Bitcoin? In recent years, Bitcoin has gained a reputation as digital gold. But let's be real, Bitcoin is only 15 years old. It lacks the centuries of trust and stability that silver offers. Plus, Bitcoin's volatility is its Achilles heel. It can soar to record highs but crash just as fast. On the other hand, silver, while not immune to price swings, has a proven track record of retaining value over time. It's tangible, it's finite, and it's immune to the technological vulnerabilities that could undermine digital currencies. But here's where silver truly shines. Its dual role as both a monetary metal and an industrial powerhouse. Gold doesn't have this advantage. Approximately 55% of silver's demand comes from industrial applications, ranging from solar panels to electronics. This industrial demand provides a built-in floor for silver prices, giving it an edge even during times of economic stability. Let's not forget the gold-to-silver ratio, a key indicator that often signals silver's undervaluation. Historically, this ratio has averaged around 15:1, but in recent years it has skewed significantly higher, sometimes exceeding 80:1. This suggests that silver is not only undervalued compared to gold, but has massive upside potential if the ratio begins to normalize. Here's a question to ponder. If silver can offer the same wealth preservation as gold while also benefiting from industrial demand, could it be the more strategic investment in today's economy? Let us know your thoughts in the comments. And don't forget to subscribe for more insights as we dig deeper into this fascinating market.
I would hope that I don't think this is going to happen because Trump has a big ego, but I would hope that with the life experience he has garnered in this campaign, specifically coming near death and maybe becoming more of a religious person, he would come into this with more humility, saying, "Look, I can't stop all the debt that's been accumulated for decades before me. So, be prepared, be wise, and we'll try to get through this together and not make any crazy promises like he did last term." But I think the importance of people like RFK in charge of Health and Human Services, also Tulsi Gabbard, who has been attacked by the intelligence agencies. Now she's in charge of the intelligence agencies, or she will be. Let's just assume they all get confirmed somehow, either through recess appointments or whatever. I think that besides any specific issue that these cabinet ministers might be able to bring to the forefront, if there is successful in even 2 or 3 major issues, then it will help help Americans regain the realization that they've got to be the watchdogs on their government. They can't trust whatever comes out of it. And if we're able to have any of these cathartic moments where, for example, oh my God, they've been putting this crap in our food for so long, or these medical interventions have been untested and unsafe for this and this many years since this act or whatever, and I don't want to use any keywords. But if these things can come to light, Americans might be able to recapture the spirit of the revolution, where they stopped trusting their British government, they stopped seeing it as legitimate, and really they come back to themselves and say, look, we're in charge here, we're the people, and we're in charge of this government, and we're not going to let the deep state walk all over us anymore. If they can get back to that, then you can get through any crisis. You can help each other. It's not a threat that many people are going to become poor, because while many people become poor, it's going to balance out. Like, people become rich when other people become poor. There's nothing that happens in a financial crisis where you have a loss of wealth. You just have a redistribution of it. So if you can have a country where the people that have the wealth, which are going to be the stackers, are going to be people with real assets, if we're already coming back together and realizing that we can help each other without government, that's what we're supposed to do, then we can get through this. You can get through it. It doesn't matter how bad it is. And that's what you really want. It's not really how much gold to silver you have, or how much ammo you have, or how much you're prepared for the next crash. It's how much your community is. And if this election is going to be successful, then bringing the American people back together will give it the best chance of surviving the endgame intact as a political unit.
Now let's explore one of the most compelling drivers behind silver's potential. It's soaring industrial demand and the widening supply deficit that could fuel an explosive price rally. Unlike gold, silver is not just a store of value. It's an essential component in technologies that power our modern world. Take renewable energy, for example. Silver is a critical material in photovoltaic (PV) cells used in solar panels, a sector that's growing at an unprecedented rate. As nations worldwide push for green energy transitions, demand for solar panels, and by extension, silver, is skyrocketing. In 2024 alone, industrial demand for silver is projected to surpass 700 million ounces, an all-time high, driven largely by the photovoltaic and electronics industries. But it doesn't stop there. Silver's unparalleled conductivity makes it indispensable in a range of technologies, from electric vehicles to 5G infrastructure. As the global economy increasingly electrifies, the demand for silver continues to climb. This isn't just speculation. Data shows a 6 to 4% increase in demand from the solar industry over the past 2 years alone. Imagine what this means for the years ahead as global infrastructure continues to modernize. Now, here's the catch. While industrial demand is surging, silver production is struggling to keep up. The silver market has been in a structural deficit for several years, with annual demand exceeding supply. In 2024, this deficit is estimated to reach a staggering 182 million ounces. Why? Much of the world's silver is mined as a byproduct of other metals like zinc. Copper and gold means silver production doesn't respond directly to rising prices in the same way as other commodities. This supply bottleneck creates a scenario where even moderate increases in demand could send prices soaring. Rafi Farber highlights this imbalance as a key reason why silver is poised for explosive growth. He describes it as a ticking time bomb where the mismatch between demand and supply could lead to sharp price increases. And he's not alone. Industry analysts predict that silver's dual role as an industrial metal and a monetary asset will continue to amplify its appeal, especially as other safe haven assets like gold become less accessible. Here's something to think about. If the world is becoming more reliant on silver for its technological and green energy needs, and the supply can't keep up, what does that mean for prices in the long run? Are we on the brink of a silver supercycle? Share your predictions in the comments below, and don't forget to subscribe for more updates as we unravel the forces driving this critical market.
People should be looking out for persistently rising bond yields, which are going to happen. I just don't know how fast it's going to happen. You should not go into the Trump administration, and though I am personally very relieved that he was elected, I did not vote for him. I didn't vote at all. I would have voted for him had I been in the U.S., but I'm a registered voter in Florida, so it really wasn't that important for me to do it. I think he won Florida by like 16 points or something. That's because of all the COVID refugees fled to Florida because it was the only state that was open. So that turned the state red. So don't expect him to save the dollar or save the economy. There are some things that he can do that would help individual people or classes of people, like the middle class, maybe for a few months or something, tax cuts or whatever. And I'm all for that. That's fine. But he's not going to be able to stop the spending. I mean, this Department of Government Efficiency, it sounds really exciting. I'm not going to deny that it sounds exciting. But keep in mind that we're in a system where debt equals money, right? That's not just a saying. That's transitive property, right? If debt equals money, less debt means less money. Less money means it means banking crisis, crash, stock market crash, whatever accompanies a financial crisis. We're all familiar with it. So if he stops the debt, he stops the money, and then you have a crash. So okay, if he cuts spending radically by $2-3 trillion, whatever you want to say, there's going to be a crash. He can't change the laws of economics. You can't change the laws of the Austrian school business cycle, right? That's a law that was discovered by Mises. Uniting microeconomics with macroeconomics in the single system. It's like the grand unified theory of economics, you could call it. And he's not going to get around that. He's not going to break the law of gravity, right? So you have to continue to stack gold and silver if that's what you've been doing. Continue to do it responsibly. Same, a fixed amount every month is probably the best way to do it, and not worry about prices. And what I would say though is that we had two choices coming into this election. We were going to either head into the end game dirty, or we were going to head into it in a more cathartic. Let's remember who we are as Americans, as the West, what made the country great, and come back to the good that's left here before we have to deal with this stuff. And that's what's going to happen. We're going to head into the end game. We're going to head into a monetary crisis. Everything that we've been predicting is going to happen. It's just going to happen with a little bit more of a sane polity, a group of, a country that has more of a head on its shoulders, and it recognizes, for example, basic biological fact, and maybe gets itself a little bit more healthy, and we are able to find out who's on the Epstein Black Book, or who killed Kennedy, or whatever these nagging questions are that have been haunting Americans for decades. Maybe we have a chance of uncovering them now. And if nothing changes, then we'll know that voting is a sham completely. Because if ever there was going to be change, it's going to be now or never.
Silver's volatility often sparks debate among investors. Is it a liability or could it actually be its greatest strength? To answer this, let's examine how silver's price movements position it uniquely in the market and why this volatility could translate into massive opportunities for savvy investors. Historically, silver has been more volatile than gold, with annual price fluctuations averaging around 26.6%. This is nearly identical to the volatility of major stock markets, as shown in recent studies comparing silver to Indian equities. While some see this as a drawback, Rafi Farber and other market experts argue that it's precisely this volatility that creates silver's unparalleled profit potential. After all, the steeper the climbs and dips, the greater the opportunity for those who know how to navigate the market. Let's not forget how silver reacts during market turbulence. Unlike most assets, which tend to plummet during crises, silver often experiences sharp recoveries and rallies. For example, during the 2008 financial crisis, silver initially dropped alongside equities but rebounded dramatically as panic buying drove demand for safe haven assets. Could we see a similar trajectory in the next downturn? Farber believes so, especially given silver's dual identity as both an industrial metal and a store of value. But here's where things get even more interesting. Silver is heavily influenced by the strength of the US dollar. When the dollar weakens, silver prices typically surge. And right now, with central banks signaling potential rate cuts and ongoing geopolitical instability threatening the dollar's dominance, the stage is set for silver to thrive. Farber describes this dynamic as a pressure cooker, where the pent-up forces of inflation, de-dollarization, and industrial demand could trigger an explosive breakout. Additionally, silver's volatility creates unique entry points for investors. Unlike gold, which often requires a larger capital investment, silver's lower price makes it more accessible, allowing investors to take advantage of its dips to build positions without overstretching their finances. Farber emphasizes the importance of this strategy, advising investors to embrace the volatility rather than fear it. So here's the big question. Do you see silver's volatility as a risk or an opportunity? With the right strategy, could this be the perfect time to capitalize on silver's wild price swings? Share your thoughts in the comments, and if you're enjoying this deep dive, make sure to subscribe for more insights into the silver market and the forces shaping its future.
I think it's a pretty good buying opportunity. I looked at the low versus the high. I think it came out 9.3%. 9.3% is a perfectly normal correction. You don't even have to sweat about it. I mean, these things happened during the 2009 to 2011 major bull run at the end of the gold bull market in those 2 years. And, we barely see those on a map anymore. So what are we sweating about a 9.3% correction? It's a little bit more frustrating when Bitcoin reaches like 95,000 or whatever it's at. And that's great. I mean, I hope Bitcoin is money. I don't think it is, and I'm happy if you're a liberty-minded person who has a lot of money now. That's great. Just be careful with it and lock some of it away into an asset that has 5,000 years of history instead of just like 15. It's what I would do. So. Is this the bottom? We don't know. I don't think gold's going to go off to the races until the next printing round starts. It could stop. We could stop the decline here, and we could head steadily higher on a stair-step way, like we did in the end of the last bull market. I think that's what's going to happen. But again, like if you've been buying every month and you've been buying, a certain dollar amount every month for the past, year. Does it really make a difference if you got in at 2,800 and then you buy another tranche at 2,550 and then next month it's 2,700? Like, who cares? We've got to stop looking at the dollar price. The dollar price doesn't really matter with gold. It matters with Bitcoin. If Bitcoin doesn't keep going higher, I think people lose interest. But nobody's ever going to lose interest in gold. It doesn't make any sense.
Now, let's zero in on what makes Rafi Farber's insights so compelling. His argument for silver as the ultimate safe haven during an economic collapse isn't just speculation. It's deeply rooted in his understanding of monetary policy, historical trends, and the current market environment. Farber has consistently highlighted the flaws in today's monetary systems. with central banks trapped between inflation and recession. He argues that they have little choice but to keep printing money. This endless cycle of devaluation erodes the purchasing power of fiat currencies, leaving tangible assets like silver as one of the few reliable stores of wealth. Farber likens silver to a financial life raft, a hedge against a storm that is increasingly impossible to ignore. But Farber's case for silver goes beyond its role as a hedge. He emphasizes the growing industrial reliance on silver, which he describes as the wild card in its potential price explosion. From electric vehicles to solar panels, the green energy revolution has made silver indispensable. Farber points out that this dual demand, both industrial and monetary, sets silver apart from other safe haven assets like gold, which lacks the same industrial utility. He also delves into the market's structural imbalances. With the silver market operating in a deficit for several consecutive years, Farber warns that supply simply cannot keep up with demand. He describes this as a ticking time bomb, where any significant economic shock could drive prices to unprecedented levels. It's not just Farber saying this. Industry data supports his predictions, with analysts projecting sustained deficits well into the future, compounded by flat or declining mine output. But perhaps the most intriguing part of Farber's analysis is his take on silver's undervaluation relative to gold. The gold-to-silver ratio, currently well above its historical average, signals significant upside potential for silver. Farber suggests that as investors recognize this discrepancy, we could see a flood of capital moving into silver, driving prices even higher. So let me ask you this. If central banks keep printing money, industrial demand for silver keeps rising, and the gold-to-silver ratio normalizes, where do you see silver's price heading? Could we be looking at the next big breakout? Share your predictions in the comments below, and don't forget to subscribe for more expert analysis and insights into this fascinating market.
I think this is going to be the proximate trigger of the next financial crisis. I could be wrong, but the direction that I see it going in, it's heading in a single direction very, very quickly. What I'm seeing is, for example, if you take a look at the open short positions on the 5-year and the 2-year Treasury notes, they keep getting more and more extreme week by week by week. If you look at the COT reports, the commitment of traders reports, and to open short positions, you need dollars, right? And for dollars, in order to make any money on these trades, you need to multiply them over and over and over again. So you need to borrow a lot of money, a lot of leverage. That's how leverage works, right? So the firms that do these trades get leverage through the repo market, and the repo market is running out of dollars. And when it does, you have all these firms, hedge funds, whatever they are, that are opening these trades every day and recycling them with borrowed money. They're also stuck in them. They can't get out, right? They see a winning trade, they keep multiplying it, and then it's like when you start a Ponzi scheme, and then the first people need to redeem, you need to go more into getting more clients in order to pay them back, and then you make more money eventually. But you need to keep growing at the same Ponzi principle. So that's what's happening with these basis trades. Like, people on the other side want to close, and they have to open more, and it keeps getting bigger and bigger until you're out. Instead of new clients here, you're talking about new dollars, and the new dollars are running out. When they run out, all the trades are going to have to close at the same time, and until and unless the Fed says, "Oh, here's more dollars." How are they going to do that? They're going to buy bonds like they always do. So this time, since the short positions are so massive, the amount of dollar printing is going to have to be a lot more extreme than it was even in 2020, and it's going to have to be a lot quicker. And I think that it might even happen before Trump gets into office. We're at about a 74% ratio of total bank reserves, of repos to total bank reserves. Like, how much of this money is being used for repos? It's about 74%. So last time we had a repocalypse, as it was called, in 2019, the ratio was about 83, 85%. So we're almost there. We might not get there by January. We might get there by January, but it's going in one direction. It zigzags up and down. Eventually, it's going to reach it. When it does, the Fed's going to have to print. And when it does, the dollar's going to fall.
Let's talk about what could ignite silver prices and push them to levels that may seem unimaginable today. As Rafi Farber explains, we are at the confluence of multiple powerful forces that could trigger a silver explosion. First, consider the ongoing supply deficit. For years, demand for silver has exceeded supply, creating a structural imbalance in the market. Industrial applications, particularly in renewable energy and electronics, are consuming more silver than ever, while mining output remains stagnant. Unlike gold, which is mined specifically as a precious metal, silver is often a byproduct of mining for other metals like copper and zinc. This means that even sharp price increases won't necessarily result in a surge in silver production, tightening the squeeze on supply. Next, there's the weakening of the U.S. dollar. Silver prices have a strong inverse correlation with the dollar, and as central banks worldwide shift towards dovish policies to combat recessionary pressures, the dollar is losing its grip. A devalued dollar makes silver more attractive, not just as an investment, but also as a hedge against inflation and currency devaluation. Farber describes this dynamic as a key accelerant for silver's price potential. Then there's the psychological aspect. The gold-to-silver ratio remains abnormally high, signaling that silver is undervalued compared to gold. Historically, this ratio has averaged closer to 15:1, but in recent years, it has hovered around 80:1 or higher. As this discrepancy becomes more apparent, investors may start piling into silver, triggering a self-reinforcing rally that further widens the demand-supply gap. Finally, geopolitical instability and financial system fragility are wild cards that could push silver prices into overdrive. From potential conflicts in the Middle East to concerns about the dollarization and the sustainability of global debt, the macroeconomic environment is rife with uncertainty. When fear takes hold in financial markets, safe haven assets like silver shine brightest. Rafi Farber warns that these factors could converge suddenly, creating a perfect storm for silver prices to skyrocket. Imagine the impact of a single economic shock, a major currency devaluation, a banking crisis, or even a surge in industrial demand. Each of these scenarios has the potential to push silver prices to heights we haven't seen before. So here's a thought. Are we already sitting on the edge of this silver explosion? If the factors Farber describes are already in motion, how long before we see the results? Share your thoughts below. And if you haven't yet, hit that subscribe button to stay updated as we continue to track this unfolding story.
Well, look, basically, there were two things. The head of Cantor Fitzgerald, I don't even know when this conference took place. It was in 2024. I think it was in the middle of the year, maybe a few months ago. Could even be more recent. He said that first of all, the biggest crypto trading pair is Tether to Bitcoin, because when you're trading Bitcoin in and out of it, which most people do, they use Tether to get in and out, right? So he was saying that Tether is very important because every time somebody buys Tether, which is basically when anybody sells Bitcoin for Tether, then they have to buy treasuries in order to cover that, because they're supposed to be backed and they're supposed to maintain a peg. So the Tether is basically financing the U.S. government to a certain degree. And he's right. He seemed very excited about that. He's a big bankster, Howard Lutnick, and I think he's being considered for the U.S. Treasury Secretary, which I'm not so happy about. But, it's hit or miss with Trump. And a lot of his nominees are good and a lot of them aren't. So this is one that wouldn't be. It's not to take anything away from RFK and Tulsi Gabbard and Matt Gaetz, who are, seem awesome. The other thing that besides Bitcoin financing the U.S. Treasury and it attracting a lot of bankster attention of people that we wouldn't normally want associated with us, is I said, when am I going to be wrong about Bitcoin? When we see the next financial crisis, the next monetary crunch and the bond market collapsing, and what I said about the repos and running out of dollars and and the money market's freezing up just like it did in 2020 and 2008. If that happens again, it's going to happen again. When that happens again, if Bitcoin can maintain its price in gold terms, not in dollar terms, I don't care about the dollar terms, but if the Bitcoin to gold ratio can stay stable during that sort of crisis, then I'd say, okay, fine. Bitcoin. I wouldn't say it's money, but I would say it's a viable money derivative. Okay, because when those things happen, when you have a monetary crisis, it looks like gold's going down, but it's not. Gold always goes up during those crises in terms of other commodities, in terms of stocks, in terms of everything else except for dollars, because dollar is the chief gold derivative, right? But in a financial crisis, if you're real money, you're going to go up, not down. So if I'm not even saying that Bitcoin has to go up in gold terms, I'm saying it just let's stay relatively stable. It did not in 2022, not even close. It went from 37 and a half ounces to 10. This time, I think it's going to be even worse. But if it's not, then, at the end of the crisis, maybe I'll buy some Bitcoin. Because if it's a viable gold derivative, I'm not going to get rid of my gold. I'm not going to sell it, but I'll have some blockchain gold stuff. I don't see that happening, because if you want blockchain gold, there is blockchain gold. Just buy that. Why Bitcoin? I could be wrong, but I can't see how it's a viable gold derivative. It might be, and they would have to prove it empirically, even though I can't figure out logically how it would work.
We've examined the economic pressures, silver's unique strengths, and the driving forces behind its demand. Now let's bring it all together to understand why silver could become the defining asset in an era of global economic collapse. As Rafi Farber points out, the convergence of factors, rising industrial demand, persistent supply deficits, a weakening dollar, and a fragile financial system creates a rare opportunity for silver to break out in ways that even seasoned investors may not fully grasp. When safe haven demand intersects with industrial necessity, you get a scenario where silver isn't just valuable, it's indispensable. Think about this. Industrial applications alone are projected to consume more than 700 million ounces of silver this year, a record high. Pair that with investors seeking refuge from inflation and currency devaluation, and you have a market that is already under immense pressure. Add in geopolitical uncertainty, and silver's role as a hedge becomes even more critical. Now let's talk about price. Historically, silver has been undervalued relative to gold, with the gold-to-silver ratio signaling significant upside potential. If this ratio begins to normalize, we could see silver prices move dramatically higher, especially when combined with the structural supply deficits we've discussed. But it's not just about numbers. It's about the macroeconomic environment. Central banks are running out of tools to manage inflation and recession simultaneously. The Federal Reserve's potential rate cuts, ongoing dollar devaluation, and rising interest in alternative assets make silver uniquely positioned to thrive in the chaos. Rafi Farber describes this as a rare alignment of conditions, a moment where silver could emerge as both a monetary safe haven and an industrial necessity. So what's the takeaway? Silver isn't just a hedge against the storm. It's a potential lifeline. Whether you're an experienced investor or just starting to explore precious metals, now is the time to consider how silver fits into your strategy. As Farber says, in times of crisis, silver shines brighter than ever. Before we wrap up, let me ask you, do you see silver as part of your financial plan in the face of these economic challenges? What's your outlook on its potential role in the next big financial reset? Share your thoughts in the comments, and don't forget to subscribe to stay ahead of the curve as we navigate these turbulent times. And remember, this isn't financial advice, but rather a perspective on how you can prepare for the uncertainties ahead.